Welcome to Next Gen VC, a podcast from Gen Zs to Gen Zs. We aim to be the transparent window into the mysterious world of VCs and startups through the authentic conversations with the very individuals that make them. Today, we're joined by Andreas, the founding partner of First Momentum Ventures, founded and led by a team of engineers at heart and investors by choice. First Momentum supports tech founders tackling the B2B space, including many university founders. Andreas himself has a background in mechanical engineering, and today he'll be sharing with us the ups and downs of starting a fund straight out of uni and why he thinks university founders are greatly undeserved. If you enjoy our content, do support us by hitting the follow button and give us a follow on LinkedIn, Twitter, and Instagram at NextGenVCPod for updates on the latest episodes. Are you tired of always hearing about Silicon Valley VCs and not knowing what the greats of European VC are thinking? Well, no more. Head over to theeuropeanvc.com, the go-to place for everything European VC. You'll find podcasts, events, and expert-curated content from all over the EUVC scene. Well, what are you waiting for? Go to theeuropeanvc.com now.
So, Andreas, we're so excited to have you on the podcast. Thank you so much for coming on and chatting with us.
Thanks for having me. I'm excited.
Andreas, when we heard your story, we were really impressed because coming from an engineering background and starting a fund straight out of uni, it seems like you have broken all the stereotypes of venture. Can you tell us a little bit more about you and your story before First Momentum Ventures?
Sure. Since we started in university, it's probably a good point to start there. I studied mechanical engineering at KIT, so one of the larger engineering schools in Germany, and kind of went into it without knowing anything about the startup ecosystem there. Made my way through the first semesters there. And at some point, the startup bug kind of bit me. Initially, that was through a YouTube series that one of the Reddit co-founders, Alexis Ohanian, did, where he kind of visited startups in New York City and kind of interviewed them and thought it was really interesting and kind of like my kind of people, or where I felt like that's the nerdy kind of people that that it's fun to be around. So I kind of stumbled into the entrepreneurship club at KIT called Pioneer Garage or Pioneers Garage, which is basically a club where it's all about getting people excited for entrepreneurship. So kind of getting the idea planted, helping them along the first steps, having competitions, teaching them essential skills for starting their company. Also like visiting other startup ecosystems in the US, in China, in India, kind of seeing how things are done there. That was it for a while. I kind of went along with my studies, realized, okay, well, from seeing the startup side of things, that the digital part is a lot more interesting than just the hardware part of mechanical engineering. So kind of slid into machine learning there as well. And at the same time, took on the chairman position in that entrepreneurship club. We kind of saw that there's a ton of interesting people there with interesting ideas, and that the whole university startup ecosystem works so differently in other parts of the world, and kind of figured out, okay, well, we first need to give the founders a space to work on their ideas. So we set off an incubator with a ton of interesting companies going through there that have by now raised in aggregate or raised and exited for around 400 million euros. Then kind of seen, okay, now the financing part is the missing link, since basically the whole angel ecosystem, Karlsruhe, was basically local business people that did angel investing on the side.
Mm-hmm. Yeah, I think it's super interesting that you say people do university investing very differently in different parts of the world. Why do you think VCs have traditionally focused less on university talent in Europe versus, say, Silicon Valley, where, a lot of the founders there are people who dropped out of Stanford?
If you take Stanford as a prime example, I think there it's just the university and the startup ecosystem are basically one. And it's not just from people moving from university into the startup scene, but it's just geographically, it's one as well. And I think if you take Germany, for instance, it's a really fragmented and distributed system in a sense, in terms of like where the technical universities are situated. At least for the last 10 years, it's basically just been Berlin and a little bit Munich in terms of a startup ecosystem. And sure, you have good universities there, especially in Munich in terms of the technical talent. It's really been kind of like separate worlds that have been existing, and you kind of needed to physically move from one ecosystem into another, and it's less so just by happenstance falling into the startup ecosystem. And I think from the VC point of view, universities are really opaque and kind of hard to figure out where the interesting stuff is happening. It's really difficult to look at a research institute and be like, yeah, that's the place where all the entrepreneurs are hanging out and where the interesting stuff is happening. At the same time, you have people where you don't really have a track record that you can just use to make the initial filtering decisions. Like you don't have a CV for most people where it's like, okay, well, they had those kinds of stops on their resume, so they're probably a good founder. And it's a lot more so just raw talent evaluation instead of finding proxies and selecting there.
How do you actually assess founders for First Momentum Ventures? Like you said, a lot of the uni kind of Gen Z younger founders, they don't have 20, 30 years of credential. And a lot of early stage investing is exactly about that. So how do you think about this?
It's not just about the university founders, but it's about an issue for technical founders in general, because they probably don't follow the classical business founder trajectory that they first go into consulting, then they work at a startup and kind of then start their own thing. I think there it's a lot more so interacting with the people, having different entry points into an ecosystem and seeing how people behave over time. So really seeing like what are they doing in their free time? What are the side projects that they're working on? What are the different configurations of teams that you see and kind of like seeing them stumble, getting back up and starting the next thing. And then obviously, I mean, it's depending on the startup case, it really comes also down to the technical expertise of the founders. And we try to be as deep as possible into the different topics, but it's really also about having a network of people that you can access that can give you an input on, is this actually feasible, what they plan to do? And does it make economic sense maybe in the long run? But then it's more the VC's part to evaluate that.
That's super interesting. And on that note, have you come across kind of any specific hurdles that university founders in particular face when, building a company, especially in the early days? Because, compared to, as you mentioned, what people may have previously perceived as traditional route, consulting X, Y, and Z, university founders are much younger, their life experience is a lot less, and they're probably trying to do something just as big.
For technical founders, university founders, first-time founders, I think that all fits for a lot of cases into the same kind of bucket in terms of the issues that those founders face. I think it's in a lot of parts really a lack of access or pre-existing network. As I mentioned in Germany, I think it's also a physical or geographical component for that. But if you take the more stereotypical founder that has been at the helm of startups in the last decades, they have been part of the startup ecosystem for a while. They've maybe worked at a VC, so they know their way around the ecosystem. So it's both for them to know who's the investor that I can address, and that's relevant for me at the stage that I'm at. And in our case, like that is really investing at a pre-seed stage, and that is fine with having both technical and market risk at that stage. And then also just having an understanding for how such a fundraising process works and kind of like figuring out how much they themselves and the startup that they're building is really worth. In a lot of cases, especially technical founders, largely undervalue themselves, except if they have a network where they have some benchmarking where it's like, okay, if you have 4 really good machine learning engineers in one company, that's immediately a valuation booster compared to having just 4 business guys, basically.
Mm-hmm. Yeah, definitely. And you mentioned a lot about technical founders. Do you feel like having an engineering background has helped you become a better investor?
That is one of the lessons that I've taken away from the last couple of years is in the end, the founder is the one that is selecting the investors and not so much the investor selecting the startups. I mean, obviously we make the initial selection. And if we then go to the founder and say, well, we would like to invest, if it's a competitive round, the founder is selecting the investors. And I think having that technical background is also a factor there in terms of just building the rapport with the founders, just being on a more kind of eye-level basis. I mean, that's also probably part of the age question. If there's a GP that's 40 that has maybe is in a whole different stage of their life, then I think it's also a different conversation that you have between them and the founders. But just having that technical lens is working on the personal level, but also then just kind of like the questions that you ask. You maybe don't just hover around the easy questions, but really go deeper on the technical stuff. And I think especially technical founders appreciate that because they tend to like to discuss on that kind of topics and level. And I think there it's really valuable to build that relationship with the founders on that kind of level.
You mentioned the age side of things. Do you think that having just left university and having firsthand seen what the ecosystem is like makes you more relatable with the university Gen Z founders that you're working with compared to someone who may be 20 years your senior?
For a lot of the cases or the founders that we talk with, I think that's a big factor. I mean, we see First Momentum as our startup ourselves, and we see ourselves as founders. Obviously, it's a different growth trajectory that you play as a VC compared to a typical startup. But I mean, you're still going through similar topics, and I think it's also for them kind of like the feeling to be in this together. Even for like if you have second-time founders that might be older than us, from their end, we also oftentimes get a lot of respect for building something in that sense compared to, I've been to Bain, I've maybe worked at a startup in a growth position, and now I'm a VC, just having a different background and kind of different access to the venture side and conveying, I'm not in it just for the money, but I chose this as kind of the profession I want to go in, and it's a craft that I'm building is definitely a topic. And I mean, it's also a conversation that is happening on the LP side there as well.
Actually, this made me think of another question, which is that, now you're still quite close to the age to a lot of university founders, even though they're not who you work with exclusively. But say in 10 years' time, how are you going to make sure that you maintain this kind of like relationship with the younger generation? Because understand that a lot of VCs, they can't turn back the clock, right? What can they do to continue connecting with younger founders?
Some VCs are trying to turn back the clock and are investing in kind of like the life prolonging side of tech. But I still get offered student discounts from time to time. And I mean, one option is to shave off the beard in a couple of years and then look a little bit younger again. But no, I mean, obviously, it's a question that we have in our mind as well, and something that we actually started addressing from the beginning, because for us, it was really being in this entrepreneurship club in Karlsruhe kind of gave us this access to the entrepreneurship scene. And what I've mentioned earlier, just seeing people build stuff and kind of iterating and trying different projects. And then kind of like you have to wait for that one project where lightning strikes and where it then actually turns into an interesting startup idea, basically. I mean, obviously, we were able to do that in Karlsruhe, but in other cities, it's really difficult to do that over multiple cities. So we started building an ambassador network, which is spanning German-speaking part of Europe. 80 people so far, focused on the technical universities, like students, maybe also some junior people in startups. The people are kind of graduating out of university and then staying part of the network as well. But in general, just like VC and startup interested people that kind of extend our network into their personal networks. I think that's a route that we're definitely going to extend in the future. When other VCs, for example, try to analyze university ecosystems, they often tend to go from the top. So they go like, okay, which institutes have produced the most startups and like what professors should we talk to? And for us, it's more so going bottom up and kind of seeing what are the interesting people, what are they doing, who should we talk to, and kind of like building our network and kind of sourcing from there.
Yeah, that's super interesting. And I think that's one of the things that you mentioned as well, right, Ben? You said that university is sometimes quite hard to crack and that you've been approached by a couple of VCs to, basically give some insights into university talent.
Yeah, university talent is also something which is very interesting because a lot of VCs don't really know how to engage with students because they know that super cool ideas are coming out of universities and they're going to appeal to the next generation, which is kind of the point of venture. It's investing into the future, but they tend to stay around kind of the areas they know best and invest in those areas. So how have you kind of gone about actually like understanding areas which you may have not known much about or industries where you don't really understand? Because as part of a VC's job is to look at it from the bigger picture and the macro perspective, and sometimes that's quite difficult, especially when you're starting out as a VC.
Yeah, there's probably a differentiation also between just university founders and then also the PhD kind of scientific side of things. I'm still able to recall like the first crappy ideas that I had in my entrepreneurship courses. Once you start guest lecturing there or kind of mentoring teams there, you see the same ideas over and over and over again. And so it's kind of like having empathy there for, okay, well, this is basically the beginning of the journey and they might end up in an interesting place sometime later. I mean, if you're investing in young people, you're kind of buying an option with a lot of variance and variability in there. And just being that person that is kind of like, well, I'm the first person to trust you and have confidence in that you're going to build a company is in itself worth a lot. And I mean, maybe the first company doesn't work out. That's never the assumption that we're investing with. But in the end, it's those founders will come back when they're setting up their next company, just because like, I hope we gave them that kind of push and then also treated them well and supported them after the investment. But to your actual question, in terms of like how we are trying to build understanding around different topics, it's always a trade-off between how much do you possibly can know about a topic and how much is basically healthy or necessary to make a decision, and actually possible to know at that point when you're making that investment decision. Because I think you can easily fall into the trap that you see a topic and it's like so many points where there's potentially risk involved. If you would approach it from a very rigorous angle, then it's like, yeah, I have to check all those boxes and kind of figure all that kind of stuff out. But in the end, it's the pre-seed companies. Most of the stuff is assumptions, and you have to figure out how smart are the founders, how well have they basically kind of seen through the problem and seen different variations of it and kind of understood where to go into the future. But I mean, on the technical topics, it's a lot of following basically a thread on that you're pulling, seeing where it leads you, using the founders as your guide as well. They're typically a lot deeper immersed in the topics that they're working on, and then also just drawing from the network, from people that are working in industry that the startups are going to sell to, or maybe researchers that are working on that topic.
Mm-hmm. Yeah, that's super interesting. And maybe now I think shifting gears a little bit, we want to learn a little bit more about your experience starting a fund, because at that time you're definitely straight out of uni, like I'm sure a lot of listeners would be curious how you did that, how you built trust with LPs and things like that. But even before that, did you start First Momentum Ventures with friends from uni?
Yeah, we knew each other from that student entrepreneurship club, so kind of worked together in that setting.
How did you go about deciding who you'd start the fund with? And was it a good idea to start it with friends?
The decision kind of happened organically. One of my co-founders went to Slush, so Startup Festival, met up with the Wave Ventures founders and was like, okay, well, this is interesting. He posted that into the kind of club Facebook group, and I just commented, well, now you have time, go tackle that problem, not knowing that I'm raising my hand to basically be part of that journey as well. And I think for the rest, it was similar. It was kind of like we all were finished with our term as kind of like chairman or kind of like on the board of that club, but still wanted to be involved. In the beginning, First Momentum was also kind of in that zone between, yes, it's going to be our startup, it's going to be part of the entrepreneurship club. We quickly figured out that it's going to be our startup and we have to set it up as our own thing, also for the founders and for our investors as well. But I think it kind of grew organically in that direction. And one benefit of doing this in university is having the flexibility. We initially started as 5 co-founders. Kind of over time, people figured out, okay, do I want to basically spend the next decade or more being a VC? Is that kind of life something that I'm happy with? I mean, you have to be happy just spending a lot of times on calls and meeting people and being generally chatty and at times also salesy. And so for some, it was more so, no, I want to go back to the more technical side and forge my way there. So it was kind of a phase in the beginning where it was also kind of figuring out what is the final setup going to look like.
Interesting. So how was that conversation when some of the team decided they didn't want to carry on? Was it difficult at all, or was it fine?
I mean, I think it's never easy to have that kind of conversation, because in the end, you're sitting there as friends, but you also are sitting there suddenly on opposite sides of the table in terms of just having an economic conversation in some sense, when it's about like, how does someone exit the company? And so I think it's also for us quite an interesting experience to have, and also just be able to empathize with founders that go through a similar thing. It's a balance to strike in terms of trying to preserve the friendship and then also just trying to make the right decisions for the company and for the fund. In the end, it's something you have to get through. And I think just being engineers maybe helps there, just having an analytical perspective on, well, those are the options and now let's find the optimum in there.
And I think that's really interesting, because a lot of people, when they start a fund, they know they're in it for the long run, and the life cycle of a fund is quite long. But having people leave must have caused some kind of instability, especially with like LPs. And, you're already young, you don't have the experience of previously working in venture. How did you go about kind of firstly persuading people to invest in your fund, and secondly, kind of keep them on board after, they've seen all these people leave and, these big changes happening to the fund?
Yeah. With the first couple investors, we got immensely lucky. We got a couple introductions from people that knew us from that Karlsruhe ecosystem who were like, well, you should talk to this and that person. The first conversation actually that we had with a potential LP was in that incubator that we've built that definitely looks student built. So there's a lot of like kind of secondhand furniture and stuff like that. It's really warm in the summer and it's really cold in the winter. And we had a really crappy slide deck looking back at it. We kind of didn't expect to get through the whole pitch, to be honest. And in the end, he was like, okay, well, how much money do you already have? We didn't expect that question, but you would be the first one to sign up. He actually was like, okay, well, put me down for 200K. Here's my phone number for if the next guy asks, then I can give him my reasoning why I'm investing with you. Eternally grateful for that LP joining so early. And I mean, in the beginning, the LPs that joined were basically just investing in us as a team. So that was definitely then kind of like a conversation that was happening when we were kind of shaking out as a team. But I think for them, it was also partly modeled into the investment. I think that was one of the core risks that they were assuming, and that was one of the questions that we've been getting from a lot of LPs in the beginning is like, well, how can I be sure that you're going to be there in 10 years or for the lifetime of the fund? You're young, you might switch careers. For us, it was really like finding the people that believed in us and believed in us sticking around for the long haul. And then also, I mean, for us, kind of showing commitment there. I mean, you have a GP commitment for the funds, which isn't that easy to pay as a student, but I mean, we chipped in there. I mean, they could also track how we were developing as fund managers. And I think in the beginning, it was definitely rough, but over time, it got more and more refined. And I think they could also see that we were having fun doing pretty good investments. So I think it was a good mix there.
I also think it's very interesting how, they were so interested in the team, because if you look at, when you're investing at pre-seed, the team is one of the most important things because you can always redefine the product, change things up. And, it's interesting to see how that carries on. But do you have any advice for people who want to engage with LPs? Because, a lot of the time LPs are kind of very mysterious, very hidden away. No one really knows who they are. And the venture funds are kind of the front-facing public perception of all of that. So what's your advice for, someone who wants to raise their own fund and kind of engage with LPs?
It's a very opaque kind of ecosystem, and we're now in the process of raising our second fund, and it's still quite foggy in terms of just like, where are those supposed family offices? And then you meet some, and then it's like, yeah, well, we only invest into growth rounds in the Nordics or something like that. And it's like, okay, cool. Maybe we'll talk in a couple of years when that's the case. In the end, you have to be prepared to have a really tough and long sales process. So I think like for Fund 1, we had around 35 LPs in the fund. And I think in the end, we probably had a 1% conversion rate or something like that. Because it's so tough to understand from the outside, or just looking at someone's LinkedIn profile or something like that, is that someone that is a potential LP just by the sheer virtue of having enough money to invest in a fund doesn't mean that someone is actually interested in investing in a fund. So I think it's really being persistent in talking to a lot of people, and also kind of asking people who should you talk to, and kind of like co-opting their personal network in that regard. For us, the things that worked really well, and I think everyone has to forge their own path as well, but for us it was kind of articulating pretty clearly like, what is our USP, what is the differentiation in terms of getting access to deals, and then finding the right people that kind of give you signal as well. We really got lucky with the legal counsel that we had. We had a lot of GPs from like seed and Series A funds that were kind enough to mentor us, and also kind of like provide their profile picture for our slides to be like, that's our advisory board, and kind of also serve as reference points there as well, to maybe at least give you an in with some people that they see, okay, well, there are some people that I know that I trust that also kind of trust those guys. So let's at least have the conversation.
Before we go into the quick fire round, one last question for you, Andreas. What's next for First Momentum Ventures?
So as I mentioned, we're working on our second fund, so kind of the metaphorical 10x that you have for startups. I mean, obviously a different kind of growth model, and it's more stepwise than up and to the right continuously. But we're basically going from the MVP stage with our first fund, where it was basically focused on the intersection between B2B topics, really technical topics, and pre-seed, to kind of moving that to product version 1.0. So it's going to be the same investment strategy, but actually like the fund sized for the strategy and not the strategy following the fund size. So we're going to size up a little bit on the tickets to play a more active role in those rounds. And then also kind of have reserves for follow-ons and stuff like that, but still going to be focused on the DACH area. We might do some deals outside if we come across something interesting, but the German-speaking part of Europe is going to stay our home for a while.
That sounds really exciting, and all the best for that. I guess now is the time for the quick fire or would you rather round. And you basically have 20 to 30 seconds to answer a couple of questions that we prepared for you. Are you ready?
I'm never ready for those kinds of questions, but go ahead anyways.
Okay, first one, hopefully easy one. Tell us a fun fact about Germany.
We're terrible at building infrastructure. Everyone assumes that we're great, but we're actually shit at it.
Okay, next question. If you could live anywhere in the world, where would it be?
Traveling has been hard the last couple of years, but if I look back at where I've been in the past, Singapore was really great, but I also feel at home in the States. So it's probably maybe the West Coast and then jumping over to Singapore from time to time.
What's the story behind naming your VC First Momentum Ventures?
I think we kind of just brainstormed different names and different variations of it, but it was basically trying to convey what we wanted to do with the fund and basically give the first push and the initial push for those kinds of companies.
And this might be quite a tricky question, but what's your favorite startup within your portfolio? You can be biased if you want.
Yeah, I mean, that's a question that we actually get asked quite a lot. So and I think it differs quite a bit from person to person. For me, I'm really excited about Dive Solutions, for example. Sorry if I'm getting technical now, but it's basically a cloud-based fluid simulation tool. The founders like to use the analogy of a ball pools that you have at McDonald's. So kind of like using those balls as the unit of simulation instead of having it all grid-based. And so you can simulate all kinds of crazy fluid dynamics. They're getting used in gear systems and for wind turbines and automotive use cases. And I think just there's such an interesting team. For example, the CEO is also a mechanical engineer that kind of taught himself coding to build the first prototypes of the software, and now is the fully fledged sales guy that actually likes to do sales calls. And I think that's quite rare to see from engineers. So I think it's just really great to see the transformation that they've been going through as well.
Awesome. And another one about Germany. Where's somewhere that everyone needs to visit in Germany?
I'm probably biased there since I'm living in the south of Germany. I'm not going to say Munich because I think that's the obvious answer. But Freiburg, I think, is a really great spot to go to. So it's close to the border to Switzerland. You have the Rhine. You have a lot of vineyards around it. So it's a really nice hill country close to the Black Forest.
And finally, to finish off, what is your one biggest piece of advice to a university or Gen Z founder?
I think going with your gut in some sense and not being afraid to cut losses. The big advantage that you have as a uni founder is that you are at the beginning of your journey. And I mean, you can just try different things, see how they feel, and try different team setups and see how you get along there and kind of iterating a lot faster than other founders are able to do. Also just being open and asking for help. I think a lot of people are really open to helping, at least from my experience as well, especially when it's like helping the next generation of people coming up. So I think just sharing what your problems are and not being afraid to call it quits if it doesn't work out and just moving on to the next thing as well.
Well, that was really, really interesting and insightful. Thank you so much for coming on to the podcast. I'm sure our listeners have found this really, really interesting. And we're super excited to see what you do with your second fund.
It was a pleasure to be here. Thanks for having me.
Thank you for listening to this episode of The Next Gen VC, a podcast from Gen Zs to Gen Zs. If you enjoy our content, do support us by hitting the subscribe button and give us a follow on LinkedIn, Twitter, and Instagram at Next Gen VC Pod for updates on the latest episodes. Are you tired of always hearing about Silicon Valley VCs and not knowing what the greats of European VC are thinking? Well, no more. Head over to theeuropeanvc.com, the go-to place for everything European VC. You'll find podcasts, events, and expert-curated content from all over the EUVC scene. Well, what are you waiting for? Go to theeuropeanvc.com now.